I saw an article today that just every time I see these things, it just drives me up the wall. It's because of the. It's just so obvious when you see these things that the what benefits the average person and what benefits those who control the economy, largely control the economy, they are not in line at all. So I see this article that the surprise jump in prices may be a good sign for the economy, and it's not stoking the fires of inflation. So it said that core consumer prices, excluding food and energy, jumped the most since January 1991, signaling that prices are stabilizing after dropping from the COVID-19 shutdowns. So, with a huge portion of the population being working poor, um, excluding food and energy from the inflation statistics is just a slap to the face to them because you'll see soon. So the Federal Reserve has a rate of 2% inflation in which they hope to see prices raise on average 2% per year. So that means each year your dollar's purchasing power goes down to 98 cents. Um, so of its previous purchasing power. So just a 2% decline per year. And obviously sometimes it's higher and sometimes they say it's lower, but it's much higher than they let on. So I mean, you're looking at um, within, you know, 5 years, you're looking at your dollar being worth about 90% of what it was today, give or take a few cents. So 10% over 5 years loss at least. Um, so I mean that doesn't help the average person. Um, Maybe it helps companies, and they show this picture, this lady with her daughter shopping, or son, I guess. She's got a mask on. Says Miss Smith, who works as a security guard, had to take time off to care for her son. She wears a face mask. They had to point out that she's wearing a face mask as she shops with her son, Demir, at the Tiger Market in Oxon Hill, Maryland. So this is a lady who had to take time off, so she's not getting paid. The stimulus checks have not really been coming for these people, and they're celebrating a rise in prices, saying that that's a good sign that prices are going up. And here's what can cause prices to go up. Printing money and having more money in circulation um, can cause inflation of prices if there's an also increase in velocity or the exchange of the money, because it's a basically you have more dollars out there competing for less goods. You can also have inflation due to things like supply chain disruptions, which is something we've definitely seen and they don't seem to mention very much, but we've definitely seen it, and it's rearing its head hard. Um, so that can cause prices to go up. So, I mean, for someone having to take off work to take care of their son, this is what they used as an example in the article of someone shopping. It's just disgusting. Um, so, core inflation, less food and energy, was up 0.6%, now running 1.6 rate year over year. Still low compared to the Fed's 2% target. And remember from previous videos we've talked about, inflation, you probably already realize this, is theft of your purchasing power, and it's how they monetize debt um, in order to increase the deficit of the government. Basically, it's like its own form of taxation where they decrease the value of the dollar over time in order to make it easier to pay back. So that's why they have to have inflation. They just try to keep it manageable so that people don't notice and they don't revolt against it. Because if it was too crazy, if it was too high, then the average person wouldn't be able to buy anything and they would be upset, which I suspect is something we may see soon, but I don't know. Um, but anyway, so one thing it did mention at the very last paragraph, the government said the cost of food at home index rose 4.6%, with gains in six major store groups or grocery store food groups. Beef was up 14.2%. Fruits and vegetables up 2.3%. So food way ahead. I saw pork was like 10%, eggs were like 10%. So food, things people need, um, way up. So, and they put at the very end of the article. It's just ridiculous. I mean, how do you live with yourself reporting like this? God, man, I feel for the people out there who are struggling right now because the media is just full of liars, man. Like they're not directly lying, but they're not telling you the full truth. Um, so I just saw this little thing, this from Business Insider. It's the 1938 cost of living, new house $39,000, average income 1731 per year. So that is 1731 per year is a little bit less than half of the cost of a new house. New car 8,600, so half the average income. Average rent 27 per month. Tuition to Harvard $420 a year. Movie ticket 25 cents. Gasoline 10 cents. United States postage stamps 3 cents. So gold then was $35. Today it's $19.50. So the average new house today is around 38 or $384,000. And it's because they build these big, huge homes nowadays. Minimum. That's like the Ryan homes and such. They're huge, and it's more than most people need. But that's what you're gonna buy if you're buying a new house, unless you get like a townhouse. Average income today is 48,672 in the U.S. And tuition at Harvard 51,904 per year. So what's interesting about this is 1938 cost of gold is $35 an ounce. Tuition at Harvard $420 a year. It comes out to 12 ounces for the year, or 1 ounce of gold per month to attend Harvard. Your average income was 1731 divided by 35. You're getting 49 ounces of gold. If you extrapolate that today at 1950, you're getting $96,000, 441. Much less than the average income today. While the new house, so if you take the new house, $39,000 or $3,900, and you divide that by the 35, you're looking at paying 111 ounces of gold, or 111.42 ounces of gold. You make that today's ounces, you're looking at a price tag on a house of 217, 285. What's interesting about that number is that's actually the average sale, like right around, I think the average sale price in the US is around like the median. So the average is skewed up because of some extreme examples, but the median, so the middle number for house sales is around 230,000. So it's very close, way closer than 384,000. And what's funny is it's just slightly more than what the average income would be had it kept up with the price of gold, with the change of price of gold. Tuition at Harvard is also pretty close in number. So hold on. Or no, tuition at Harvard doubled compared to that. So it's interesting though. So as we know, the U.S. dollar continues to decline. Now, this is not even on a 100-year time frame. So this is a 80 what's it, 2020 right now, so that's 18 years later, so 10, so 82 years. Um, a decline in the purchasing power, or the decline in the average person's income, increase in the price of house and such. So it's no wonder so many people are so strapped on debt. You can't buy a new house because they don't even make a normal size house. I mean, I live in like a decent sized Cape Cod house that was like your typical 1950s house. It's tiny compared to modern day new houses, but it's funny, at the time it was the new house in the 50s. This is what everyone was building, and it works perfectly for me and my family. It's a nice house. It's nice and cozy, nice and warm. What else do you need? It's not like it's just crazy out there. But regardless, so when you're looking at inflation numbers, and they're looking at the average price of a house, how much has that gone up? But that can be skewed because you can make a house bigger. I guess you could look at, maybe they're looking at the square footage and such, but you know, what most people, when they're looking at inflation, they should really be including food and energy, the things that people use on a regular basis. But if they did that, then inflation would be really freaking wild. And they would report it, and people would be like, wait, what? But most people are just caught up in their video games and not paying attention to things, so they don't know. They don't really recognize the change in the store, especially since people are using credit cards, so they're not, really thinking about how much they're buying when they go to the store and such. Um, but something's gonna give soon. I think it's getting too just too ridiculous for a lot of people, and I think that's where a lot of this unrest is coming from. Uh, Fed employed people who feel like they have a future don't go out rioting. So that's a symptom, not the cause of the problem. You know, it's funny, we're facing, like, I was looking at something about Chicago, like large groups of people basically descended on the luxury goods stores and ransacked them. I saw live streams of it and people just running around the store stealing Canada Goose bags and Gucci whatever and all that stuff. So when Rome was continuously beset by barbarians, it was all coming from the inside. It was people who lived within the borders basically just ransacking from within. I mean, we're literally people have seen it for a long time. People have known it was coming, and unfortunately, this is the end of the republic, I believe. I mean, there's no coming back from this. Um, just historically, you can look at many examples, and people try, and maybe they hold on for a little bit longer, but it's just inevitable. It's the money's been debased too much. They've gone too far, and they're not willing to stop because in order to keep themselves in a position of power, they have to keep going. So it's unfortunate, but that's just the way it is. And I hope everyone the best as we continue through this transition period, transition of power, economic system. I think that we will, at least within a few years, we'll wake up on the edge of a new system. Um, and it won't be the great privilege we've had in the past with purchasing power against other currencies and other nations will no longer be. Um, we'll be at parity at best at that time with the other major nations. So the standard of living will probably continue to decline until we reach parity with the majority of other people. And most Americans, I'd say, are not prepared to deal with that or live like that. Um, but it isn't a bad thing necessarily. We've lived lives of extreme excess and materialism, and it hasn't really led to happiness for a lot of people. You look at some other countries where people are very poor and a lot of cases they're very happy. So you need to really step back at this time, think about what's important to you, what's really important, and what are your non-negotiables, what do you need, and start preparing those things and preparing yourself for disruptions in supply chains because it's going to get worse before it gets better. And we may go through a situation where the winter gets very cold and very hungry. So you best be ready, and the people around you best be ready as well. So, yeah, that's what I have to say about that. Have a good day. Thanks for watching.